There's been a lot of contention and conversation around VIEs, variable interest entities, over the past. You have some very large tech companies like Alibaba, Tencent, and Baidu that are VIE structures when they're traded on the US markets. Well, we have new news today that says that China is going to ban new VIEs into the future. So what does that mean for existing VIEs, and how are they going to structure these companies moving forward? All right, jump into the article by Bloomberg, China to close loopholes used by tech firms on foreign IPOs. Now, two highlights: existing VIEs will have to improve transparency, and Hong Kong listings are exempt from the ban and still need to be approved. All right, so the big news here is China's planning to ban VIEs moving forward. Now, this will prevent Chinese companies from raising capital in foreign markets through like the New York Stock Exchange or the NASDAQ. Now, the ban and why the reasoning behind this is they want to secure the data inside of those companies. They don't want that leaving China. I don't know how big of an issue this was before, but that is the primary concern, and why when DiDi went IPO back in July, they immediately shut down DiDi's app, and they basically put them at a dead halt for months, and they're still in that situation right now. And they're planning on reversing the IPO that happened almost 6 months ago now. Now, it's saying that companies that are using the VIE structure would be allowed to pursue an IPO in Hong Kong as long as it was approved by regulatory. Now, that last sentence is kind of concerning, indicating that those companies that have VIEs currently, like Alibaba, Baidu, Tencent, are they going to have to do a relisting in the Hong Kong market? I know some of them are already listed in the Hong Kong market. That's not the point. The point is are they going to have to take their companies in the VIE structure off of the New York Stock Exchange or NASDAQ? That's the concern there. But however, the Chinese Regulatory Security Commission said that basically they're not planning on banning VIEs that are listed currently. But they didn't provide any additional details. Now, and just as a reminder, VIEs were never really condoned by the Chinese government. It just started happening, and multiple companies decided to follow suit, and Chinese government just basically stood back and watched it happen. And now we're in the situation where they're saying, maybe we don't want people to be doing this. And the fact that the Chinese government isn't providing a little bit more clarification around this is going to cause more frustration and speculation by investors. Now, according to the sources in this article, they're saying companies currently listed in the US and Hong Kong that use VIE structures would need to make adjustments to their ownership structures that are more transparent in regulatory reviews, especially in sectors off limit to foreign investments. And the article continues to go on, just basically saying that this is very unclear as to what will happen moving forward. Will Chinese companies that are deemed sensitive firms just be delisted from the US markets? Or what exactly is going to happen? There's not much information in this article that would provide any clarity to that. Now, honing in on data security concerns are going to be the reason why a VIE would be delisted is extremely concerning to me, because in its nature is pretty subjective at this point. We haven't had any indication from the Chinese government on what those objective measures would be that would cause a data security concern for a VIE that is currently existing. So right now, we're kind of in limbo of knowing, okay, which VIEs are actually going to survive through this. Is it, most of them? Is it one of them? Is it a majority are going to be delisted? Is it just a few? We don't know the answer to that right now. I assume we'll have a little bit more clarity as we see what happens to DiDi moving forward and what is uncovered through their data security review that has been going on since July. Now, that's supposed to wrap up, I believe, sometime this month, mid-December or late December, and that might provide some clarity, but I highly doubt that the Chinese government is going to come out and directly give any light into what exactly the criteria are. They're going to leave that as loose as possible so it gives them extreme flexibility to move as they wish. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. Thanks so much for watching. My name is Frank Finance, out.